Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for Thursday evening, the 10th of December, 2020. So here we are now getting in towards Christmas. Can you believe that? We're still 50 degrees in Chicago. It's going to finally get cold this weekend, but my gosh, this has been phenomenal. Today, what's phenomenal is word late today, this afternoon, was that the FDA Commission voted 17-4 with one abstention, 17-4, 4 against, 1 abstention for passage to allow the FDA to pass the emergency bill to give us that COVID-19 vaccine. I don't know the next step. I don't claim that I do, but I know that that occurred. We also had today good news out of the European Central Bank. Ms. Lagarde stepped right up to the table. You know, they chose somebody great. I was always impressed with her at the IMF. I'm very impressed with her at the European Central Bank. And they're adding another 500 billion euro to the amount of their relief package. They have extended the package for 9 months. They're opening another package to make sure that banks get the money to put out into the economy. So they're doing what I think are all the right things. That doesn't mean I'm the right one, but I think that they're doing it, and that was not unexpected. We've seen a good rally tonight that's continuing on that. It happened during the day, the dollar a little bit weaker. So as we take a look, I still like this PAVE program. And by the way, now that COVID is, let's call it out of focus, now that the FDA's going to rubber stamp and do its thing, where does it put all the focus for the next 7 days? Question and answer time. Wheel of Fortune, you didn't get that one. All right. It's going to be on the chambers of Congress. Can they get us our COVID-19 package, and just what is it going to be? Or are they going to fight? No. Ms. Pelosi said they've stayed beyond Christmas before. Well, I don't want her to just give a bill to the Senate and then they all run home. Let them get a bill done for the people. They're there for them. They're not there for their political careers, right? And the people need it. Okay. Maybe the Republicans will say no, they don't need it. Then let them be the ones at fault. Somebody's going to have to fall on this. In any case, this backed off a little today. We're still in an uptrend, higher lows, higher highs. The market's now got the 18-day average, each day climbing higher. I still favor this market on the bull side. Why? Trend up. I define bias, looking at the 18-day average. Is the market trading above or below the 18-day? If it's above, the bias is up. If it's below, the bias is down. It's a filter on the swing line. To break the trend on the swing line, you'd have to take out 2034. You see that number right there. The resistance, I understand why the market's backing off. You went right up to that zone of the upper Bollinger Band. Sometimes you get within a hair's breadth and you back off from it. Markets will trade 95% of the time within this band. 95%. It's the mathematical way that the algorithm works. My contention is the pros program that in to their analysis. And pros that, and by the way, that doesn't mean algorithm trading. It can be pros. I'm a pro. Other people are pros. It could be an algorithm. It could be Johnny come lately that doesn't do this analysis and or trade for his living. But you understand what they are, and they're important. So I see that as the resistance area, and momentum is locked in and still embedded. Now, if the red line were to close under 80, I'd go, uh-oh, more of a correction is coming in the market. Until that occurs, I contend the pros are buying the market, looking to get up again to that Bollinger Band. In SMH, you lost the embedded reading. When that's lost, and let's just take a look at this. You lost it today. The only time you can get it back without going through the whole rebuilding process is the very next day, and it has to get both numbers here staying back over 80. It gets 1 day to do that. So was this a fake move, and the overnight action will prove that with the COVID, the stock market's up, or is the stock market baked this all in already, and it's more of the news of buy the rumor this is going to happen, sell the fact. That's what we're going to find out here. In the XLI, you've broken the trend. You've got a lower low and a higher high and momentum turning down. Now, you're not in a downtrend, but you've broken the sideways pattern and you've gone back to neutral. There's a bigger story going on. Do you see how the black lines are coming in right now to the sideways action? That's often indicative of a market that wants to start just churning back and forth. In XLE, ta-da, you got up to the upper Bollinger Band. What did I tell you yesterday? Not that I said the market was going to go there. I said I'm blown away that you can get an API number of 9 million build, a 20 million, I'm talking net build of the products and the crude, a 20 million build out of the EIA, and the market doesn't break. If you were to line up traders in a room, they tell you at this time of the year, nah, that's bearish as can be. When markets don't react negative, as they should, to a report like that, there's something else going on, and any friendly piece of news kicks the market. What's the friendly piece of news? FDA meeting today, passage anticipated of the vaccine in North America, the US. Canada's already approved it. QQQ, down to the 18-day average. What do we call that number? That is the number that we call the line in the sand. If you look at yesterday, this market was flirting with losing its embedded reading. If it loses it, I look for prices to travel where? To the 18-day average to regroup. That's what the market's doing so far. It's not in a trend anymore. The emerging market, still very friendly, still has the embedded reading. I contend the pros are buying this on each pullback. This is probably going to become an overcrowded trade over time. What does that mean? I haven't yet to see an analyst that say they don't like the emerging markets. Now, there's definitions of emerging markets. I don't think China's an emerging market anymore. China's another grown economy. It's going to keep growing, that we know, but it's no longer an emerging market. Thailand's an emerging market. Parts of South America could be emerging markets. You get what I'm saying? Different areas that you have to look at. In the gold market, we have a pattern of higher lows, higher highs, but prices are staying under the 18-day average. That keeps the bias to the downside. Should the market take out this 171.24, you could be right back before you know it at the 200-day average, and if that gave ground, you're back at 166.71. So the market can't afford to do that, in my opinion. If it does, could be a problem in it. In the gold miners, you're also stuck here. You've got a pattern now of a lower low, a higher high, the 200-day average in gray, and the 18, you're fighting your battle there. You've stepped out of a trend that could get bearish. If you take out 35.01, you could be down to that lower band. Momentum's just turning down here. TLT, uptrend. Higher lows, higher highs, but it has not closed over the 18-day average. That's the filter on the swing line. So without it, you're just neutral on the chart, at least I am. And last, the FXE, the market yesterday lost its embedded reading. I pointed that out. I said, it's so strange how these things happen going into the report now. The only time you can get back that reading is the day after you lose it. You lost it by just a fraction. You know, had you been down to a 73, 74, I don't think it could have been regained today. Now you regained it. So you're back in the bull camp. I think the pros will be buying this unless you break through this 113.36 level in a big way, and maybe you're targeting the 114.85 zone. I talk this and a heck of a lot more and very specific. I want you to buy here, sell there. You're going to get a great chance to see me wrong, and you'll see a wonderful chance to see me right. I promise you it's balanced. But I use monetary rules. In other words, you're going to see me apply, especially in the futures where you got 90% leverage, a lot of monetary rules because the market's waiting to catch you wrong. And it's fine to be wrong. There's nothing wrong with being wrong. It's how you handle being wrong. The monetary stops. Where are they going to be? What are you doing? Are you playing the momentum? Well, I'm going to walk you through that in both the futures and, if you want the combo package, my ETFs. I recorded about 4 in the afternoon, my ETF package. I balance it by 5:30 in the morning, 5:40 in the morning. I start covering all these futures markets. It'll tie in, as you can see, futures. You think of how many of these are based on what the futures contracts do. It's one after the other. So when you're looking at these in these main categories, somewhere along the line, you're in them. They tie together, and that's what I'm trying to offer you, a package. Now, I've done something else. So I've created a combo package. You can get either one you want for that. They start very inexpensive, by the way. You can get my futures package for as low as $7.95 for the first 30 days, and you're not committing to anything. You can pick up for $8.95 the ETF package for 30 days. You can buy a combo package for $16.90. Some people buy the one-year subscription, which I discount even further. In other words, it can be as low as $156 for the futures on its own without the ETF, $159 for the ETF package, $286 for the two tied together. For the next week, and that it's going to end next week, I'm putting in my charting course, so this all makes a lot of sense to you. Alone, the charting software for that's about $80. 6 hours of videos. My written updates, another $60 a month. The whole course, right now, retail, $199.95. I'm putting it in for free. You can give it as a gift. You can keep it for yourself, and you decide when you want to take it. After January 1st, I'm going to $249.95 on the course, and there'll be fillers to it all through this coming year. I'm going to be creating a number of side courses that tie into it. How do you get this? Just buy any one-year subscription to get that. Go to our website. You can read the different packages. They're all there. Go under research when you get to the website, or you can always call my staff. They'll work with you, explain how it works. Again, this is coming to an end next week, so you're not going to be getting this too often. And remember, every Saturday or Sunday night, it depends, I vary between the two, I do a weekly video, just weekly charts for the longer term traders. And that'll all be before the market reopens, Mondays or